The crypto markets continue to tumble, and Sam of FTX is to blame. We see more institutional giants having to fold as they're over-leveraged and getting exposed. Everyone's wondering, should I be buying crypto? When will the markets bottom? If you guys stay to the end of this video, I'll give you guys all the insights you need to know to make educated decisions with your investing. Well, welcome back, team, to another episode of Technical Analysis Academy. A few reminders before we get started. Over at cryptocharge.com, we have everything that you need to be a successful investor, including 5 live shows a week, all the educational content you need to be a successful investor, weekly play ideas, as well as a Discord so you can communicate with us, ask us questions, and interact with the rest of the community. You guys can use coupon TA Academy for 40% off. Now, let's take a look at the charts here. I want to start with the top of the market. I like to take a look at equities first so we can get a well-rounded view of what's going on out there right now. Now, we're seeing some things like the Dow Jones hold up a little bit better than cryptocurrency right now. And of course, they're not under the same pressure that cryptocurrency is under. We know that FTX was essentially committing fraud, mishandling user funds, and pinning up a lot of other legitimate digital assets to their FTX token, which was FTT, and essentially useless. The only real use case for FTT was to pay discounted fees for the fees on their platform for trading. So when all of this came out and everyone realized that FTX was a house of cards and not really built on anything but over-leveraged nonsense, all these assets that were underlying started to get sold. So we see crypto under a unique set of circumstances right now. But let's take a look at the Dow Jones. Let's understand a little bit what's happening there. I'm still not essentially bullish on the Dow Jones right now. Now, if we go ahead and pull up our chart here for the Dow, we can see that the Dow is actually pushed up against some pretty crucial levels right now. We can see that if we look at our Fibonacci range from the high that came in over here in January of this year and the low that was set over here in October of this year, we can see that we got a bit of a double bottom that came in here, that we're up against the 618 Fibonacci right now. Now, this is an area where a lot of professional traders will look to short the market. It's one of the areas where price is either going to reverse from here and go significantly higher, or the downtrend is going to continue. And we know that the Federal Reserve in December is planning to hike 50 basis points as opposed to the 75 they've been hiking, but that's priced into the markets. The markets are expecting 50. They've been expecting 50 for quite some time now. And if the Fed continues to talk hawkishly to us, it is entirely possible that the markets continue to sell off based on that news. If the Fed tells us they're going to continue tightening, that they feel like even though inflation data is showing that it's battering a bit, we saw CPI and PPI come down, coming cooler than expected. That's positive, but we're still quite far away from the Fed's goal of a 2% inflation rate, right? So if we're looking at where we are technically, butted up against a very crucial Fibonacci level, looking at just a few weeks down the road, the Fed meeting coming up, it's entirely possible that these markets turn over on themselves and come and set a new low. So if we back out here and take a look a little bit back, I do think that we probably come back down towards some of these other levels, towards maybe the 200 week at least, maybe take a stop down here towards 30,000 points. But I do think that we come down towards this major support level down here around 26,000 points. There's a lot of liquidity down in here, especially if we see the markets just react very bearishly to some more hawkish statements from the Fed. Now, stepping over to Dixie Dollar Index, you guys can see that this has basically been a parabolic rise up over these last few months, right? Really, essentially since May in 21 when we bottomed, we really got started and cranking in January of this year on this dollar index rise. You guys can see that we've actually had a small break in trend as of late. You guys can see that we had a lot of support here all the way up, and most recently on November 10, we got a big capitulation candle down, and we found a little bit of support here down in the 105 region. Now, a lot of people are calling for a dollar reversal, saying the dollar is going to come all the way down. I'm not completely convinced that we're there yet, because as long as we're maintaining above 103.5, the 105 area, it's entirely possible that the dollar will continue higher, especially if it can reclaim this 109.7 level. The dollar can continue its rally, which will send risk on assets like stocks and cryptocurrencies lower, right? Mix that with the narrative from the Fed that they're not ready to start easing yet and they're going to continue to tighten. The markets will not like that. Now, if we do break below 103 and that's no longer a level of support, I think we're going to come all the way down towards this 96 level, because what we did here is we grabbed an inverse Fibonacci range. We went swing low to swing high instead of swing high to swing low, looking for what that retracement would look like if the dollar is going to continue higher. And we would need to maintain above 96, 98 points. If we're able to maintain above those levels here, then prices can continue higher, but that could be a short-term move down for the dollar. So again, we're still at a crossroads right now. Maintaining above 103 sends the dollar higher. Breaking below 103 sends risk on assets significantly higher. Okay. Now, taking a look quickly at the gold and silver chart, talking about this quite a bit on stream. We've been tracking gold quite closely here. We saw this double top come in for gold. We saw a little bit of a rally shortly, right? A break of this downtrend. But what I think is really happening here for metals is that we're coming in for a retest. This was a double top. I think we got a breakdown. We're coming in for a retest of this $1,800 level. Now, gold and silver are supposed to act like a risk-off asset, meaning while stocks and cryptocurrencies aren't doing so well, metals should be doing relatively well. But we're seeing something different right now. We're seeing metals act like a risk-on asset and behave with the rest of the market right now. So my thesis is that gold comes down towards the $1,300 level, and I think that silver's got a way to tumble as well. I think we're probably going to come revisit the $14 region after we've rejected most recently this $22 region. Now, taking a look over here at the oil market, we also saw something very similar structurally. We saw a distribution structure come in here, a double top on oil, came down, tapped in the 76 level, technically squeaked out a new low, and that's positive for us as consumers, right? Because at the pump, we want to be paying less. That's a very painful thing from an inflation standpoint that we're paying for right now, right? The two things that most consumers right now feel the pain with is paying for gas at the pump and prices at the grocery store, right? Those are the two things that we see most reasonably reflected for us in our everyday lives. So if we're able to break below this 76 level on oil, the next major support doesn't actually come in until this $64 region. So me personally, I'm rooting for a break below 76. Now, let's talk a little bit about cryptocurrency. Let's talk about what's going on with Bitcoin right now. We've looked at the structure many, many times. We talked about how this bear flag was forming in here. I believe this was going to break to the downside. A lot of people were looking for a retrace up towards the 30K region. I was looking for a break lower. And if we actually drop down to this 4-hour time frame, what can we see here? We can see after we got this confirmation break, right, we set our new low around 15.5 in here. We started to crank out a new bear flag in here, started to coil up. I told our Discord members, said, hey, right here around this apex, let's get short. Boom. We're down 7% on this, but we were short, so we're making money. But I personally believe that Bitcoin still has further to go. We are probably going to bottom somewhere between the $11,000 and $14,000 region. Again, looking out on these weekly charts, you can see how much liquidity is down in this region, how much support would be formed down in here if prices were able to get down in there. It's healthy for markets to rebalance themselves. A revisitation of the $11,000 to $14,000 region would actually make me as bullish as I possibly could be on the Bitcoin price chart. Now, taking a look at the Ethereum price chart, you guys can see that we have actually not taken out the lows yet. If we come back down to a smaller time frame, we look at this daily time frame here, you can see that we have not taken out the lows that were set over here around 1,050. We're trading around 1,100 right now. Now, we are in a little bit of a flagging structure, just like we were on Bitcoin. If we actually drop down to a 4-hour time frame here, we did break out of the smaller structure here, right? You guys can see some lower lows and lower highs are coming in. But I do think that we eventually break below this 1K region for Ethereum. I don't think it's going to be able to sustain above 1,000. I think we come significantly lower. Now, looking at the XRP price chart, we're here on a 4-hour time frame. We're looking at a structure that has not visited its lows either yet, right? We can see the low is set over here on November 9, around 31 cents for XRP, and we have yet to come down and break below that yet. I do think that this is a bear flag. You can see that it's a pull in the downwards direction. We're getting a consolidation structure. I think we break down, visit 25 cents, 20 cents, and if we are incredibly lucky, we will see a 17-cent XRP. I hope you guys are ready to sell your left kidney to buy XRP at 17 cents because it is a generational buying opportunity. Last thing we need to talk about today is the Solana price chart. We know that FTX is one of the big reasons why Solana saw one of the heaviest sell-offs during this whole capitulation fear event is because Solana was one of the biggest underlying assets for FTT tokens, both liquid and illiquid, meaning some locked up, meaning some liquid ready to sell. So we saw a huge capitulation. So if we look at from the swing high up here around $38 to the swing low, Solana dropped off over 70%. That is a massive drop, even compared to some of the other altcoins. Most altcoins didn't get beat up 70% over this period here. But again, we come out and we look at this on a weekly chart, and we're going to be strictly, like we've been with the Bitcoin price chart, where does the liquidity sit? Where do prices need to revisit? It's down here at $5. And I know that for some people who are big bag holders on Solana, they don't want to hear that. Just like as an XRP holder, I'm not necessarily happy to see my portfolio go down as XRP heads towards 25, 20 cents, maybe 17. But at the end of the day, if it means that I can then increase my bag, lower my average, overall build a better position, I'm all for it. So I hope that this gave you guys a little bit of insight as to what's going on with the macroeconomic landscape, how FTX is impacting all of this, and some serious value buys for Bitcoin, Ethereum, XRP, and Solana. I hope you guys have a wonderful day. Catch you next time.